Everyone, welcome back to my YouTube channel. In today's video, we are going to solve one more long question from the standard costing, and this question is from the Kaplan exam kit of F2, and this is the last question. Previously we have solved a few, but don't worry, if you have missed my previous video, you can still access it from the playlist available on my YouTube channel at free of cost. So let's start the today video. So question number 469 is saying an operating statement has been partially completed for a company that makes pies and the pastries. So they have provided an operating statement, and in the below they have provided the three requirement. So before going to the requirement, the first thing that you need to identify whether these operating statement are prepared under the absorption costing or the marginal costing. And how can we identify the same? By looking at this first line. So if budgeted contribution is given, that means this statement are prepared under marginal costing. But if the budgeted profit has been given, so that means this statement has been prepared under absorption costing. Okay, and the format for the both is different. So I have made one of the small video on this concept. So if you want to watch it out, just comment marginal costing or absorption costing format. I will send the link. Okay. So now first requirement is for the following material variances. Alright, state whether it is true or false that the variance stated above could be caused by the better quality ingredient being purchased for the pies. So first one is your sales volume variance. So if we look into the statement, our sales volume variance is favorable, and that's a good thing, and it's favorable by 175. See, it is favorable, that means we have done higher sales. And why we have done higher sales? That could be due to the more customer demand of those better product. And how is the better product being made? By using the better quality of ingredient. So it could be the one of the possible reason. Just a second. It could be one of the possible reason that will caused by the better quality ingredient being purchased. Now next one is your material price. So if we will look to the material price variance is 700 adverse, and so that means you have buy high quality of material that lead to your actual cost being more than the budgeted. So 700 adverse means it's a bad. That means you have actually spent more on the material as compared to budget. But this could be the possible reason. If you are buying the better quality of the material, that might cost you the more as compared to the budget. So this could be the possible reason. Again, true. Yeah, so true, because we have buy the better quality ingredient. That's why material price variance is adverse. Now next one is your labor rate. Okay, so now labor rate variance. So this variance depends on how much we pay labor per hour, not the ingredient. Okay, so this could not be the reason. So false. Now again, material uses variance. So material uses variance is your favorable 600. So that means you have used the 700 favorable. 600 favorable means you have done good thing. Good thing means you have less wastage has been incurred in the production due to better quality of the material. So you have used the better quality of the ingredient that causes to the less wastage, right? And again, less wastage means your better uses, and that lead to cause favorable variances. So again, it's true. Now sales price variance. So if you look at the sales price variance, it's adverse, 750 adverse, right? So adverse means we have not done good in this area, right? But while better ingredient might allow you like a higher price, that will causes you material price variance adverse, but your sales price variance, it's wholly depend on your pricing strategy, not on the material alone. So that's why it's a false. Now, next question is what should be the title for the title be in the gap one? So, gap one, yeah. So, if we are using the marginal costing system for the operating statement to prepare the operating statement, so you might see we first take the budgeted contribution, right? Then sales price variances, then cost variances, and after netting of all these expenses, it will give us actual contribution. Then after we deduct the fixed overhead variances and all to calculate the actual profit. So gap one is related to your actual contributions. All right. Now next is your last one. Using the following information, calculate the variable overhead expenditures and efficiency variances. State whether if they are favorable or adverse. All right, so we need to calculate the variances one more time. So here we will use this same format, right? So I will delete this for now. Now it will be SR into SH. The concept is same as we have learned for the material one. Now this will be your SR into AH. Now it will be AR into AH. All right. So now let's calculate. Now difference of A and B will be your efficiency variance, and B and C will be your expenditure variance. Okay. Now the concept will be same. SR means your standard cost per hour. So if we will read this part, so actual production was 1500 unit which were completed in 3620 hours at a variable overhead cost of 11,000. See, AR into AS, they have provided the ready-made figure 11,000. Okay, and they also provided the actual unit we produce and actual actual hour. They have also provided 3620, but we don't need this in this part because they have already provided the ready-made informations. Now the budget was that each pie you take 2.5 hours. That means the according to the budget, one unit of pie need 2.5 hours to make, and the variable overhead absorption rate would be 3 per hour. See, this 3 per hour is your standard cost per hour. So 3. Now again here 3 into. Okay, so AH is actual hour which is given 3620. Now the twist is here, SH part. So SH means your standard hour for actual production. So standard hour for one unit is 2.5 and actual production was 1500. Okay, so this is the most tricky part where the student get confused. So don't get confused in this part. Okay, so now let's multiply all 3 into 2.5 into 1500. 3 into 3 is 620, and now 11,000. Yeah, so difference, the first is asking the expenditure variance, which will be difference of these two, and next one is your efficiency variance, which is difference of these two. So as our let me write down here, this is our expenditure. So as our expenditure variance is negative, that means it is adverse, and efficiency variance is positive, that is it means it is favorable. But the question didn't ask you to mention the favorable and the adverse. Yeah, they mention, yeah, state if they are favorable or adverse, you need to mention. So all right, I hope this question is clear now. Yeah, we are done with the long question. In coming up video, we will go for either budgeting part or performance measurement question.